Good afternoon, everyone. Grain futures had a USDA crop report today. When you look at the screens, you wouldn't know that it's usually the second largest crop report of the year, second only to June 30th acreage data. Corn prices are only down now about 2 cents. Bean prices up 2 cents with only wheat in the lead. So let's look at the USDA numbers. Well, the USDA came out showing a massively large corn number of 97 million acres on corn. This is second only in modern times to the 2012 crop, which was 97.3 million. If we go back to 1936, the year of the drought, that was the largest corn acreage ever. It was like 101.98 million acres back. It's 102 million acres back then. Yet the corn market continued to hold previous lows. We showed our newsletter. Bearish report should hold 330 on the spot corn, and it did, and now we're almost near unchanged. Why is that? Why are soybeans not exploding on a bearish corn number and a bullish bean number? Because nobody believes it's going to stick. First off, on corn, if we do plant 97 million acres, and if we grow a trend line crop of 176 bushels per acre, and we use linear regression, assume that the supplies continue to stay high, and there are other things that aren't going to dislocate that, we're going to have a 3.5 billion bushel carryout. So many are suspecting what's happening is that people put those planting numbers in hoping for possibly preventive plant. That we're going to see a lot of preventive plant acres this year, which not probably is going to come to fruition. So a lot of these acres are going to get switched over later on to beans. Also, another note on this 97 million acres of corn. Would you know that in modern times, 2012 was our largest acres, 97.3 million acres, yet it was our highest priced corn at $8.50. How could that be? That's because the U.S. dollar was in the tank in 2012, and we had a drought in 2012. Well, one thing is happening right now, and the U.S. dollar is sliding, and it's heading for the tank because now there's talk of another $2 trillion package to that. So they are diluting the soup pretty hard for the currency, sending the dollar down. The other thing we don't know is there going to be a drought or not. But in 2012, it was a collapsed dollar and a drought that took the largest acreage in modern times and gave us the highest price in corn we ever saw. Just saying. So we'll go from there. So currently, corn for May down a penny and a quarter at 340. About 6.5 cents off the lows. July corn down 2 at 345.5. December corn down 2 1/4. 357.5 there too, about 4 cents off their lows. Now soybeans, the number came in at 83.51. Average guess going in 84.86. You would think we'd be exploding. Well, we're not, because soybeans are near the better levels of the last 2 weeks since making a low on March 16th. We're sitting here parked 60 cents off the lows, whereas corn is, this morning got down within a penny or so of the lows made on March 16th. So they're already creating an elevated price, waiting for more Chinese potential demand, or waiting maybe for Brazil or Argentina to possibly. So for that reason, beans continue to hold. We're up a half a penny right now on the May beans. 8.82 3/4. July down a quarter. 8.86 1/4. Beans for November new crop up 2 1/4 right now. 8.76 3/4. Now we go to wheat. Wheat number was just on the acreage. Spring wheat pretty much as expected, come in near 12.6 million acres. The all wheat number was looking for 44.98. It was 44.65. Again, almost a non-event. Stocks down about 20 million, what the average guess was for March 1st. Wheat is just continuing to put a premium back in, concerned on what Russia's going to do on quotas. If they expand quotas or not, they have food inflation because their ruble is collapsing, not because of any short supply, but because the ruble is collapsing. Bread, that's another story. They got the wheat. It's a matter of milling it. So we're finding wheat, again, recovering. We're within about a dime of the highs made last Friday on Kansas City. Up 7 3/4 right now for the May contract, 494 1/4. July up 8, 494 1/4. July up 8 1/4, 501. September new crop up 8 3/4, 508.5. Chicago wheat, there too, about 15 cents away from last Friday's highs. Up 2 3/4 on the May, 572 1/4. July's up 6 at 564 1/4. Minneapolis wheat continues to be the dog, but it's up 2 3/4 cents on the May at 537.5. July up 3 at 547.5. New crop September up 2 at 555. Over in the livestock futures, they eked out a new low under yesterday's activity on the April contract, but not for the June contract, and we're finding stability. We got end of the month, and the markets basically were broke because when you consider what cash is doing, and yes, box beef is down again today, we'll get to that, but you had EFT funds that are long only, and it's come out over the last few sessions. They have been high redemptions where people are just saying, get my money out of there. I don't want to be in that market. So the hell with fundamentals, just sell. And that's what's been going on. Now, the cattle market, again, lower today, but the worst at one time was $1.20. Now, as we head to the noon hour, we're unchanged on April cattle at $99.20. That's where the fear's at because it still carries any premium versus the other contracts. June is up $1.17 at $90.25. August up $1.27 at $91.90. Box beef, yes, lower again today. Down $2.67 on choice, $248.30. Select down $3.81, $234.33. But again, it's a slow bleed versus the rocket ship rise we had experienced last week. So somewhere in the middle is going to be the truth. Cash will probably soften here for a while, but the board is going to start putting this discount to an end after today. End of the quarter, March 31st, EFTs should be liquidated out. Feeder cattle, they were down today at one time $3.30. Now they're up 10 on the April, 120.15. Made up 7 cents, 120.97, a $1.70 off their lows. August feeder still down 12 at the moment at 126.80. Hogs are mixed, down 87 on the April, 53.07. June up $1.10, 60.92. July up $1.92, 6,500. As even they're currently trading discount to cash. And summer hogs are usually worth much more than April hogs, and so we're seeing the market taking back some of those discounts. On the gold market, down $40.70 today on the June contract, 16.02. Silver is up 8 cents, 14.14. You might ask, why is gold not exploding? Because we're still dealing with deflation until you get to inflation. They're powering ether into these motors, the economy, and once we get 4 of the 8 cylinders popping, you might see something, but it's going to take at least 7 of the cylinders popping on this ether before we can worry about inflation. So we got to go from deflation to possibly stagflation and then to inflation later on at the end of the year if we can get through this. Crude oil, after yesterday's break, bouncing overnight as much as $1.50 from yesterday's, actually $2 from yesterday's low on conversation that President Trump called Putin and talked. He said they'll have more talks. Well, that's all nice, but we know how talks take time. Like the Chinese trade war, this time it was 18 months. And so that created a bounce in oil that's been faded off. Now we go for inventory data this afternoon. API numbers will be out tomorrow morning at 9:30. Department of Energy numbers, likely to be bearish. We'll see if the markets can absorb that. Make crude oil up 52 cents today, 20.61. Just a half an hour ago, they were at like $20.05. June's up 45, July up 30, August up 28, October down 9. This is a complete reverse of what we've been seeing, where the front was dropping the most, deferred's the least, and now we're flipping it, and the front is the strength for now. Gasoline today, we find the May contract down a half a cent, 61.29. Heating oil up a half a penny, 101.98. Any questions, you can find us, and that's at heartlandinvest.com. Thanks for listening, and have a profitable day.